Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Friday, May the 16th, 2025, recording this in the morning. Not a huge amount going on, not a huge amount of sort of headlines or geopolitics of particular market moving notes. So it seems to be that we're in a little bit of a consolidation. The only thing we do have this morning, which of interest, is probably like the preliminary numbers for the University of Michigan for May. Again, this number is just sort of a survey data, and we know that what's been happening at the moment is that the survey data has been coming in much weaker than the actual hard data. Nonetheless, it is interesting because the Fed looks at it, just especially to look at the forward kind of inflation expectations here, which, as you can see, are quite actually elevated, 6.5, and then going a bit further out at 4.4. So the Fed would want to see those coming in. Also, just in general, just with the stock market, which has kind of rallied over the last couple of weeks, interesting to see if the sentiment and current conditions has calmed down a little bit. The other thing as well, just in terms of inflation and the tariffs and all that kind of stuff, is that we do have the import prices month over month for April expected to actually be negative. So a 0.2 here. So hold on, where's the import price? Yeah, minus 3/10 here. So let's keep an eye on that one as well. But again, this is kind of secondary data, and I don't think the market will be reacting too crazily. The other thing as well is that today is option expiry day. So we have the big option expiries. So there could just be sort of all kinds of, slightly strange volatility. Let's see what happens. So just other stuff to sort of look at. Basically, the equities keep on grinding up. And no huge surprise there. Like, I just want to first of all look at the VIX and see what's going on with volatility. And you can see here that if we look at the VIX, this is on a 1 hour chart. You see here down below here, you see the VIX itself is now down under 18. So on the hourly chart here, you can see that it's just been going straight down, which is a normal thing that, except in times of stress, we know that the VIX curve, is in a contango kind of structure. And also what I have here is just the VIX spot minus the front contract. And again, you see on the hourly chart here that in moments of stress, it does go positive here, which really spiked up, as we all know, after the announcement of the tariffs. But as we can see, it's getting to a much safer area. It's below that key kind of zero. So it's now negative, indicating that the front of the curve, the VIX spot, of course, is in a calmer space. And so you see here where we are, it's fairly calm. Now, all things considered, that should be, partly sort of a tailwind for equities. And we're seeing here on the ES here on the daily chart. As I've been saying, it's not sort of ripping higher, but it's grinding higher. So the low volatility. There's nothing really to stop this at this point. The data we got retail sales yesterday, which was I would say okay because there was some revisions. It was a little bit soft on the initial numbers, but if you look at last month's numbers, they were revised upwards. So I would say net, you could say a sort of inline, maybe a fraction soft, but certainly nothing indicating that the US economy is collapsing or even weakening in any significant manner. So at this point here, we see that the equities are just grinding up, on the back of that low volatility. And keep in mind that the vol targeting funds, as the volatility goes, they will increasingly sort of allocate a larger percentage of their capital to long positions here. So what we're seeing here is a price action which is consistent with low vol and vol targeting funds, just sort of adding in a very consistent way. And again, technically here, we're well above all the moving averages. We're above the fib levels, and you've got to say that my best guess here is that this grinds upwards a little bit more. Now, valuations are still quite high. Let's have a look here. I've just got a couple of charts which I picked up this morning. So if you actually look here at, let's say, the valuations, you can see here that the PE valuations here are pretty high, and we're getting up on just the S&P itself up to almost 22. So you can see here that the PEs, so the price to earnings, had gone down to almost 18, but now it's getting up towards 22. So it's starting to get a little bit expensive from a valuations point of view. But on the other hand, the other thing which I just want to point out here is that this is the number of S&P members over the 50-day moving average. And you can see that since that sort of collapse after the tariff news here, that the breadth of the rally is expanding. So that means more and more companies are actually sort of sort of performing relatively well, at least in terms of the charts. So the breadth is there, getting to slightly high valuations. But the point is, nothing immediate to cause, in theory, the S&P to sell off. The same with the Nasdaq. So I think what we could get, I'm not sure what's going to happen today with the option expiry. There could be some volatility, but it seems to me that there could just be some grinding action, neither too high nor too low, especially with the VIX at 18. In terms of other markets, as we saw yesterday, something I was talking about yesterday, which was the 30-year yield, and I highlighted that the 5% level. And indeed, just on the back of the retail sales numbers and the other data we got yesterday, the PPI, which was a little bit soft, so that was a good thing. So on the fact that we sort of got just a flat retail sales and the PPI was a little bit soft. That was an excuse for the bond market to have a bit of a rally. And you can see here what happened. This is a daily chart, but basically once we got up to 5% on the 30-year, there was immediate buyers there. So this is quite interesting just to let us know that at that 5% level, which is kind of like a triple top, that represents, sort of value for a certain sector of the real money kind of cohort, maybe the pension funds and whatnot. Because there was some literally to the tick as it got to 5%, there was some pretty serious buying of the ZB futures contracts. And also we have to keep in mind, as I think I was saying yesterday, that we have a real yield at the moment on the 30-year of about I think 2.65%. So that also starts to represent quite good value. So that's inflation adjusted. You're getting a real return. So all that to say that as the 30-year, if we look at the 10-year, that's also down quite a few basis points. What's that? It's down about 15 basis points. Even at the front end, not quite as much, but also the front end here recovering. And if we actually just look just at the on the Bloomberg terminal, we can see sorry, I'm just bringing it up, what's priced in. And we see we were for the end of the year at two cuts. But you can see now we've gone up to 2.25. So we've gone up, a quarter of a cut in terms of dovishness. So the market just repricing slightly there, nothing dramatic, but essentially just a little incremental sort of dovish repricing there. In terms of other stuff looking at, we just had some comments from the head of the Swiss National Bank, Mr. Schlegel. I think it is the new governor there. And I'm always kind of curious to see what's going on with the Swiss, because it is perpetually sort of bid just in safe havens and very low inflation. And we can see here against the US dollar, it's actually weakened a little bit here, so that the Swiss government will be quite happy with that, and the Swiss National Bank. And just to say that the governor of the Swiss National Bank this morning said that they've been in discussions with the US and that there are no problems about the currency. And he said they're not a currency manipulator as such. They do intervene if they believe that the Swiss franc is sort of getting overvalued for no sort of fundamental reason. And he also said that they would be prepared to do sort of negative interest rates if inflation continues to drop. So that's just kind of interesting here, trying to talk down the Swiss franc, which, as you can see here, has actually been pretty strong against the US dollar. So this is USD, Swiss franc, so it's been pretty weak. So what's going to be interesting here is this some kind of flagging formation or a basing formation? We'll see what happens with the US dollar. Talking about the US dollar, not a huge amount of energy, to be honest. I'm not going to lie and say anything crazy is happening. You can see over the last 2 or 3 trading days here, the US dollar index has traded more or less sideways. And for the major cross pairs, you see, let's say the euro here, drifted up, drifting down, drifting sideways. Same with the Japanese yen. The Japanese yen had a little bit of strength here, but just overnight sort of calm. So just in terms of the currencies, not a huge amount. And again, what's interesting, just to say, there's this lack of correlation between the yields in the US and the US dollar. We saw that when the yields are very high, the US dollar didn't have a huge amount of strength. On the other hand, what we've seen in the last 36 hours is that the yields have come down in the US, but the US dollar is not really collapsing. So it looks as though that's more of a sort of a confidence and a sentiment issue and a fiscal sort of a budgetary kind of issue. Again, not a huge amount of headlines in the last 24 hours about what's going on in Washington with the budget. We'll see if something sort of happens more. One thing which has got everyone's attention is that gold had a pretty serious, well, I don't know, over exaggerate here, but basically was rejected here. You see that on the shorter term fib. In fact, I'll break it down to a 4-hour chart, and you can see here this orange here. This is the shorter term fib retracement, and you can see here that on this 38% fib, it couldn't even muster up a bigger bounce than that, and immediately sold. So you've got to say at this point, this does seem to open the gates down for a retest, maybe a little bit lower down, probably even down to the 3,000 or technically a bit more like the 29.65 kind of level. We'll see. Certainly, if it gets below the 31.25 level here, it could be that gold just is due for a little bit of a puke down, and that's not surprising because if we look at, let's say, on the dailies here, you can see that it's a double top retest. It's very, very overbought. I was just reading yesterday the Bank of America fund managers. It's considered the most crowded trade long gold. It's now considered a little bit overbought. Having said that, the Chinese central bank and other central banks, quite possibly would be a buyer. They are relatively inelastic in terms of buying. If they want to buy, they do buy, but they're not completely price insensitive. So it could just be that, let's say market participants like, let's say the Chinese retail market and the Chinese central bank are just saying, hey, this has come a long way. Let's just sort of draw in and get a slightly a better price. The other thing as well, I was just looking here on the daily shot, which I'll bring up, is that if we look at the seasonality, not commodities, where do I want to go to? Is it commodities? I think it's commodities. Just to look at the seasonally weak period. So this is where we are here as you go into sort of late May and June. You can see here gold seasonally, you see it tends to have a dip in the early summer here. And it could be that at the end of the summer, it starts to push up. So it could just be a little bit of tiredness. I'm always a little bit wary about these seasonality kind of sort of metrics, but it does seem to be quite clear the gold is a little bit weaker during the early part of the summer here, July seasonal bottom. So maybe this could be something as well. We'll keep an eye on that. I think that's about it, guys. There's not a huge amount going on. As I say, I expect equities to just keep on grinding up, although, as I say, we have the option. We'll see if gold continues to push down lower here. There's not a huge amount of energy in the stock, in the currency markets. And at this point, oil also just sort of having a little bit of weakness, just probably waiting to see if, a bit more sort of information about what's happening with Iran. Actually, we'll just have a quick look at oil just while on it. Trump was saying there was contradictory statements. Trump saying that the Iranians have agreed not to develop nuclear weapons, not to develop enriched uranium, but again, the Iranians said, "Hey, not so fast. We need to talk a lot more." So oil, just coming off a little bit here. Not a huge amount to say about that. I'll leave it there. Have a good trading day and a great weekend, and let's keep the conversation going. Thank you.